All right, so you want to start investing. I'm going to show you how to do so because I think a lot of people make this overly complicated, and I'm going to model it off of my beginner investing course, $7. You can get it in the show notes below if you get it. This is not a quick sell. It's literally $7. If you want it, you can get it. If not, not the end of the world. But I'm going to show you everything in it at a high level so that I can walk you through the steps to actually start investing, because I get a lot of questions of, let's call it parts of the journey questions. So, if I look at this as a 5-step or 5-day agenda to educate yourself and to fully get invested, I often see a question on like day 2 with zero context of what day 1 holds. And so I always want to walk people through a process, and people are confused when I say that. And they are always, depending on who it is, might get mad that I don't have a quick answer, but I want to explain this to you so that you understand it. And if you're receiving this video, obviously you could be watching it independently, but if you're receiving this in a DM or an email or something like that, the reason I'm sending this to you is because I want to help you. I want to put you in a good position, but I don't want you to get burned. And oftentimes when you answer or ask a question on a day 2 or day 4 without context of the previous day in the way I'm presenting it here, it will burn you and you will be mad long term at me. And it's kind of like a child, right? A child will get really mad if you take away the candy, but long term, when they're 34 and they have great health, they're going to be like, thanks, mom and dad. That's kind of what I'm looking at here, and how I want to explain and present this. And so you can see inside of the 5-day course, if you want the full breakdown of everything, detail by detail, and set up your portfolio 100%. I'm going to do my best with this YouTube video to explain it to you and to make sense of it. So on the 5-day agenda, I have day 1, stock market basics. And what this is really education behind investing, which I think is step 1 to everything. I think everybody could agree, if I don't understand something, it's gonna be really hard to be good at something. So the first thing is just be a student in the class. Just understand what we're talking about first, and then the rest of it will start to make more sense. I can't do hours worth of education right here, so it's gonna be hard to do that. Hence the $7 investing course in the link in bio or the show notes below. I literally break this down step by step. The secret to wealth, how simple it is. The stock market explained to a 5th grader, and then also just getting started from an educational standpoint. That's not what this YouTube video is gonna be about today. But also, let's dive into day 2, 3, 4, and 5 to actually start investing. So assuming that you have all the education, you're fully qualified to begin investing. Now I want to get to day 2, which is the investment accounts. Now, first things first, I got to understand as an investor, let's call it asset location. Where am I locating all my assets? How do I know what makes sense, right, for my situation? So I'm going to go into the academy real fast and show you. That's great. Net worth increase of $57,000 in 6 months. Not too bad. 13 hours ago. Oh, wait, this one, $180,000 net worth increase, or what is that? $120,000 net increase in about 4 months. Incredible wins. I could go on and on, but I get distracted by all my wins. Let's go to the classroom where I'm going to show you inside week 9. So week 9 is going to explain the investment account. Remember, if you're looking at here at day 2 investment accounts. So in week 9 specifically, we cover a lot of investment accounts. There is no one size fits all, but as you have learned, if you were to use a default option for anybody out there listening to this video, this is where you would want to start. So my ideal scenario would be an employer sponsored plan of some sort, depending on what type of line of work you do and stuff like that. It might be a 401k, it could be a 403b if you're a teacher or something like that, maybe a 457b, maybe even a TSP if you're in the military. Thank you for your service. And then also on top of that, Roth or traditional IRA, and then a taxable brokerage account. That is the ideal scenario for most people. That's a general overview. This is not advice by any means, and this is where you work with us one-on-one to get that really, really one-on-one support within the academy with myself and my whole entire team. So the second thing is add-on options. Things I talk about a lot, which I highly recommend, but it depends on the situation and then also kind of how you're positioned and what your goals are. So HSA, solo 401k. I have both of these. Health savings account, and then also as a self-employed individual, a solo 401k for my wife and I. Maybe a self-employed IRA. Maybe you have employee stock pension plan. Maybe you have an employee stock ownership plan. Maybe you have some RSUs. Maybe you play in the cryptocurrency world. I think I own some Bitcoin, very small percentage. Again, this is why videos and context are important. Understanding how to position these different various investment accounts in general. Maybe you have some child investing accounts, 529s, UPMAs, brokerage accounts, maybe a Roth IRA. We have a lot of these for my daughters. This is a priority of investment video you can watch on. It's kind of explaining all this real good detail on YouTube as well. Just type in Budgetdog priority investment accounts, that will pop up. And then on top of it, let's look at the actual one step further equation. So all of these accounts considered, how do we actually go through and do the math to get here? So let's just say we have $100,000 gross income. your household, you make $100,000 combined between the spouses. Take that number and multiply it by 15%. That is your gross income that you should be investing into the stock market. However, asset location, going back to investment accounts, is very important. Where do you actually locate those dollars? Where do you actually invest those dollars? And this isn't getting to the actual investment. Remember, we're still at an investment account, the actual account that holds the money. We are not talking about the special funds, the ETFs and index funds and stocks within that account yet. We're still at the investment account level, which is asset location, right? And so the first thing I want to do is walk down these steps sequentially. Sequentially is a very important piece of this, using the 15% through 1 through 4. And you'll see remaining you reach 15% of gross income. So the first thing is I want to get the match at your company. That's free money, 1 for 1, whatever your company matches. Get as much free money as you possibly can. Let's just say in this example that equals 3,000 of the 15,000 that you have, okay? So you're 1/5 of the way there if you can do basic fraction math, right? I did graduate high school and college and got my CPA, so I am qualified to speak on 3 divided by 15 is 1/5. And then secondly, some people don't have this, some people do, ESPP, with a guaranteed discount. If applicable, like I said, you would then put some money into that, depending on the situation. Now, most people don't. Let's skip over that. Number 3 is a Roth or traditional IRA. Let me make a quick distinction between Roth and traditional. So the Roth and traditional just means when you pay tax, right? So traditional, you pay tax later. You defer tax to a later date. Roth, you are basically taking the hit now. You're paying the tax now to defer the benefit later. That's the difference. That's all it is. So you could have a Roth or traditional 401k option. And a lot of people get that confused. They just say Roth and they don't understand the difference. I had a question in my DMs the other day, like, should I do a Roth? I'm like, well, is it a 401k Roth or an IRA? So this limit for this account, which the account is this, the IRA, it's not Roth and traditional or an account, it's a type of account. This IRA limit is $7,000. So let's say we had $3,000 in this one. We had step 3 is $7,000. We max it out for us in 2024. And then the 401k, the remaining 15% to reach the 15%. So we've done 3 plus 7,000, that's 10,000 total. And we want 15,000 because we have $100,000 gross income times 15%. So that difference is 15,000 minus 10,000 equals 5. So step 4 would be a $5,000 increment. So if I added up steps 1 and 4 here, it would be 3,000 plus 5,000 is 8,000 total. So that is the amount asset location wise that goes to the 401k. And the other 7,000 is the IRA that goes to the IRA. So you have 8,000 in a 401k, let's say, and let's say 7,000 in an IRA. Now, the beginning of the year, I know I have $15,000 to allocate of my $100,000 of income. I know my asset location, my 401k, and my IRA in this situation. And now I can dollar cost average every 2 weeks or so into that investment account. Simple as that. Take the total amount. Let's say you get paid 26 pay periods, 8,000 divided by 26. 7,000 divided by 26, and that would be your bi-weekly contribution. Now, if you decide to do it on a monthly basis, you would take the total divided by 12 versus the 26 I used. If you decided to do it on a weekly basis, you would do the total divided by 52. Obviously, your 401k is dependent on how often you get paid, but your IRA is independent of your employer, so you're able to do that whenever, right? And so that would be how I would divvy this up in the beginning. Now, on top of that, and debatably, I don't want to throw a wrench in anything, but debatably, this number 5, HSA, could slide up here to number 2. Debatably. However, I treat this as a little separate. And so you could, let's say you have additional money over 15% of your gross income. You could then move to your HSA. You could then move to a taxable brokerage after, and that's an unlimited cap. Like there is no contribution limits on a taxable brokerage. So there is no end to that. You could literally contribute $1 million if you wanted, if you made $9 zillion in the year. And so this is a good add-on option actually. And of course, the taxable brokerage I think is very important long-term. It is part of this ideal situation, but it does come after your retirement because I do think the retirement is the number one. And then you move the needle up the retirement age or the flexibility or whatever you want in your life with the taxable brokerage ideally. Of course, there's ways, and again, not to throw a wrench in it, there's ways to withdraw from those retirement accounts early, Roth conversion ladder, 72T, things like that. We get into pretty good detail into the Academy on. So there's a lot of different ways to navigate this, right? But to keep it super simple this is really what it comes down to, and keep it really, really easy. On top of that, when we go to the day 2 investment accounts, we really want to consider a few rules of thumb on that. And that's what I have right down here is a good rule of thumb for all of these all these accounts and the asset location you guys decide is 1 to 5 index funds and or ETFs and diversify. You know, the US isn't the only country in the world type deal. Technology isn't the only sector in the US. I know a lot of people think that, but it doesn't always work out that. There is an energy sector. There is a consumer discretionary sector. You get my point. Turn on dividend reinvestment. I can't tell you how important this one is right here. A lot of the big brokers like Vanguard will automate this for you. Set up your automatic investments. Do not manually do this. Trust me on that. And don't sell anything until you retire or early retire. If you do that and you just follow what I mentioned, you will be successful. Guarantee it. So that's day 2 of the investment accounts. Now, day 3 is investment products and portfolio allocation. Now, I'm going to break this in 2 segments, right? The investment products is the most important thing. So understanding on like a Vanguard website, and you can go to any broker you're working with. You have your broker, then you have your accounts, then you have your investment products. So my broker in this example I'm using is Vanguard. My investment accounts is what we just talked about, which are these guys right here, accounts and plans, IRAs, brokerage accounts. We just talked about these. Maybe it's an UGMA, maybe it's a 529, maybe it's a small business retirement, like a solo 401k. Then within all of those accounts, so we put the 8,000 in the 401k, the 7,000 in the IRA example. Now we need to select the investments within, which are mutual funds, ETFs, money market funds, individual stocks, maybe CDs, maybe bonds. Understanding these are key. Now, you're going to naturally ask, well, what should I do? How should I pick these, right? And that's where we talk about investment products and portfolio allocation. So the first thing I want you to do is do a risk profile quiz. Now, I can't explain this entire 5-day, $7 course in this YouTube video. Like, please understand that. I'm not trying to quick sell. I would love to do this, but it's a long course, right? And so if you want to, it's in the show notes below. You can just go ahead and take the whole entire 5-day course if you would like. And you can do it at your own pace, so you can speed it up if you want. So the investment product, we have to be able to select through these. Now, I will say by a default, typically what works for most people is a mutual fund, which is an index fund, or an ETF. I am 100% ETF, but I have been index fund in the past. I don't have anything against the ETFs or against index funds by any means. There was a slightly more favorable reason to go ETF, and I have a YouTube video on that. You can go in the top right hand corner and select that if you were curious. But all I want to do is go into these Vanguard ETFs. And again, if you take the risk profile quiz, which is, I'll literally Google for you, Charles Schwab risk profile questionnaire. You literally take something like this, and this isn't like an end all be all by any means, but you take this quiz, you're going to get ultimately super simple quiz up here. You get down here and you get a conservative, moderately aggressive, etc. risk score. And it's more than just risk tolerance. You got to understand your goals. You got to understand all this other stuff. But assuming that, you can have a sample allocation. Be very careful in this 5% or this cash investment. Let's call it a recommendation by Schwab. They are a bank. They do make money on your cash. And so I don't know. I'm just a conspiracy theorist, is they would recommend that because they make some money. I don't think anybody with an aggressive allocation should have a 5% investment allocation to cash personally. So I would personally bump these 5% personally, not recommended advice, to this large cap equity portion. That's how I would look at it. But this gives you a pretty good idea of 45% large cap, 15% small cap, 20% international, 15% fixed income. And we're going to come back to this in a second, but this gets you to a pretty good idea. Now, understand you already know where your assets lie as far as the types of account asset location, because we covered that in the investment accounts. Now we went to the investment products and we understand this is kind of where we should go. Now, how do I link this large cap equity to an actual investment product is the next question. So I'm going to show you. If you open the filters and you need to go to, a large cap equity, for example, and you're like, hey, 35% large cap equity plus this 5%, maybe 40%. How do I go find that? How do I go find large cap equity? I go into their platform and I literally can go select go over here. So let's just say management style. I'm going to do index because I don't want active. I know I want a stock because it's a large cap equity equals stock. And then I know that here's my style. There's large cap, boom. And then US based. And you have a list of options already. We've gotten down to 17 of 88. You get my point. You can go on and on of what you want. Risk scale, whatever your risk scale is, you think about. It's not, that risk scale is not that important personally. And then tax efficiency if you want, depending on what you're looking for. But let's just say you come across these. You can compare all of these very easily. Click these and then you can do compare if you would like. But if I'm looking at this as an investor and I want large cap equity, probably going to go to the US total market fund. And if I do up here and do total market ETFs. Boom. There we go. 1 of 88. And so I just basically navigated myself to my large cap equity, right? It's super simple. And so now I want to understand my investment products and that portfolio allocation, because I know my product is this VTI, but my allocation, which goes hand in hand, which is why they're on day 3, my portfolio allocation would be, let's say 35 plus this 5% cash, right? 40% VTI. And then my 10% we could do the same process, but for small cap equity. Again, this whole entire program will walk you through step by step how to do everything to your actual portfolio itself. I can't do this in a YouTube video. Now, number 4 is fees and taxes and risk profile, which I kind of mesh into that as well. My day 4 fees are very, very important. So there are tons of fees. I have an entire YouTube video on fees, but if you want to fast track your way through it, literally just go through this program. But I do have a breakdown video of exactly what those fees and taxes look like. What I'm going to say is the biggest fee you want to be aware of is this guy right here, which is why they present it, the expense ratio. If I see anything under 20 basis points, this is considered 3 basis points, 1/100th of a percentage point. 0.20% or lower, I'm comfortable with as a whole in my portfolio. However, you're going to have a split of 40% this, so there's going to be a weighted average of your expense ratios within your account. 40% at 3, let's call it 3 basis points. You're going to have another fund that's probably going to be 6 basis points. You get my point, so you do a weighted average. My next thing is taxes. I have to understand, and going back to week 9, this Roth traditional and also taxable, I have to understand the difference between how those are taxed. Like I said, Roth, taxed now, benefit later. Traditional, benefit now, taxed later. Super simple. Taxable has a little bit different of a rule set. I have a very good tax drawdown tool in my academy that I'm going to show you guys real fast. That's going to help. So on this tax drawdown tool, which is very, very cool, I will break it out by pre-tax, Roth, and taxable brokerage. Now, the way this is taxed, and I can't explain a whole tax lesson on this, but pre-tax, the reason I do a drawdown tool here is when you draw that money down. But I'm going to explain the piece of the puzzle that is relevant to the conversation we're having. So pre-tax, you are able to withdraw if you're married filing jointly individual. I'm going to zoom in a little bit for you. Married filing jointly individual, $29,200 if you take the standard deduction. This is not going to be a whole tax lesson, but my point is you're starting to understand the tax impact, right? So you're able to start to withdraw that amount tax-free. If I make $29,200 in a given year and I withdraw, or I don't do anything and just take $29,200 from this pre-tax bucket, it's considered income, I have a standard deduction to offset that. My income is actually 0. So I pay 0 taxes if you understand that game, right? The other thing is the Roth. As you see, there's 0 taxes associated with it because as we talked about, the Roth, you pay taxes up front, you get the benefit later. So there is no taxable impact. So there's no reason that you can withdraw whatever you want, but that doesn't mean you should. The last thing is the taxable. And so when you are married filing jointly in retirement in 2024, you're able to withdraw up to $94,000, essentially, in $50, whatever it is, tax-free from your capital gains, and do not pay any capital gains. However, the tax on the pre-tax bucket, let's say you pull $29,200, this is income tax. Roth, irrelevant for this conversation. Taxable brokerage is capital gains, which is 0, 15%, or 20%, depending on your income bracket. So if you are in the 15% income bracket, you would, technically speaking, you could withdraw up to this amount and pay essentially 0 in taxes. Anything above and beyond, obviously, there's a different consideration. But you can see the capital gains tax rate table, 0, 15, and 20%. Here are the income brackets, depending on where you're falling. Pretty cool thing. I say that all because you're able to gamify the tax system, and no one ever tells you how to do this. This is exactly number by number how you do this. If you prepare for the drawdown, let me say that again. If you prepare early in your life for the drawdown later in your life, yes, you have to prepare. No, you cannot just make this move when you're about to withdraw because you can't move money around in different buckets because will be taxable events. You are going to win the game. And so if you understand this early and you prepare yourself early, you're going to win the game, and you can do a custom drawdown button feature, or you can draw down to 0, and you can actually see exactly, look how detailed this is. By the retirement year, specifically 2043 in this example, how much you withdraw from each account when, what are the balances, and then also updating it for inflation and understanding the actual true balance. It's a beautiful game to play when you understand that. I say that all not to confuse you, but to explain the power of education, which goes back to day 1. day 2, even day 3, and day 4. If we get all of that together and we really understand all of this education from start day 1 to day 4, now we can actually go do this. We can open the investment accounts at the particular broker we want, right? We can go in, we can select the ETFs, we can align it with our risk profile, exactly what it is per account, and we can click invest. You will then change your family's life forever. We did this 11 years ago. We are now multimillionaires. We moved fast, but we were very intentional with our approach. And if you do this now, you're able to change your life drastically. I don't say this because you can do it, whatever the case. I say this because of the student wins we're getting. 31 pages of wins. If I type in net worth, you're about to be scared how good these wins are. Student loans paid off all, student loans done, paid off all student loans today, 2 days ago. I mean, let me just type in net worth for you and show you a little bit of sauce. $50,000 since week 3. I could go down literally. We have 22 pages of net worth, quote unquote. $34,000 in 6 months, $21,000 in 3 months. We've had $161,000 and $140,000 in 6 months. $40,000. I mean, net worth doubled. Net worth of $20,000 in 1 quarter, $50,000 net increase, $50,000 net worth increase, this is the 120 I showed you earlier, $300,000 in 6 months. I mean, these are real people doing this. And this is my academy. This is not the $7 investing program by any means. This is my top-notch service, which you will change your life with without question. If you want to book a call, you watch this long, feel free to book a call in the show notes below. I will take care of you. Net worth increase of $125,000 in 15 weeks, $105,000. She's literally killing. I think she's up $270,000 last time I checked. 288. There you go. In 10 months. It's substantial. 73,000 in 3 months. And I'm not going to go through all 22 pages, but you get my point. You're going to get wins. They're going to be insane, but you're going to do it the fundamental way. And again, this is a great start. Obviously, hopefully this YouTube video can get you started. Like, you can open the ETF, you can start to do this stuff. You can go open the investment account, go do it by all means. If you want to start somewhere, very easy. This is a $7 5-day investment program. You'll see it. It's literally right here as course is enrolled as a student right here. And so you can see all the breakdown of every single section, and actually we get you to open your investment, like literally set up your investment accounts today. If you want to go to the next level with my team, it is a 4-figure investment to get in the academy. It is not cheap. It will be worth it. I can promise you that. We won't let you in unless it's worth it. And so if you're looking to that, book a call in the show notes below and go talk to my team and just tell them where you're at. This is not a sales call. This is literally, do you feel comfortable with it? But the intention of getting on a call is to move forward and get into the academy. If you have any questions before, ask me. Literally go to my DMs, send me a question. I'll take care of you guys. And my goal is to help you, sincerely, I want to get you significant results. We are doing this every single day with hundreds of thousands of people, and you could be next if you want. You don't have to feel afraid. You don't have to feel scared. All this is coming down to, and the reason I'm making this video is it's a simple 5-day step to get started. And a lot of the stuff holding you back right now is emotion. It's not logic. I have all the logic here. And if there is emotion involved, which there is because you're human, the very first step we do in the academy is to work with a behavioral psychologist on the money mindset, because that is a very important piece. And sorry, I keep hyping my academy. I just get excited with it. 439 times people mentioned Heather. Heather is our behavioral psychologist you'll meet with independently. She's changed countless lives. You can see obviously by people's reactions in the academy, 44 pages worth of Heather reviews. They like her, to say the least. I love Heather. She really does change your life. And I hope to be part of that, guys. I have a very, very big mission to create tons of millionaires and change people's lives. So if I could do anything, hopefully this free YouTube video does help you in a massive way. We have options out there. Don't sit on the sidelines scared of life. We have solutions for you to start today. And I hope to see you guys soon, and reach out if you have any questions.